Oftentimes when we look at news, depending on where it goes first is where it's trying to target liquidity. And then if it reverses from that point, it could liquidate it and then blast in the opposing direction. And that's off of news that usually has high impact. So this is a red folder, but it's not really as impactful of a red folder because consumer price sentiment's already good. Like we talked about before, right? Inflation, all this other stuff. The Japanese yen, which we've been talking about, their interest rate, they actually, they forecasted an increase and they gave the increase that they forecasted. You can see it here on Forex Factory. I'll circle it real quick, but it's right here. So you can see Japanese press conference, policy rate. What was that? Oh, so yeah.
Baby, I'm cold.
Man, that shit not working either. I'm over here just drawing on this shit. All right, anyway, let me see if I can get this thing back. All right, so like I was saying, the actual, right, here's the forecasted. This is what it was previously. So they increased their interest rate by 100%, but it's literally less than 1%. So you can see here, we're still at the forecasted price, right? So we knew they were going to do this number and they gave us a number that we already anticipated. So if that's the case, basically it's already been priced in, right? So we already knew it was going to go that high. So the reaction that we got on the charts was pretty mediocre from that experience. Cool. So we're getting a drop down to the psychological level 2210, which I believe we have mapped out on the 5-minute chart here. So 2210 came down. What a nice touch. Yeah, it was a nice touch. It was completely blasted off from that psych level there. Psych. No liquidation of the lows either. Just a nice tap and then back into the box. So we'll see how they treat this box, because we might be able to see a correction if they hold it and then get above this top. Then we can try to take the breakout. Otherwise, like we said, they just aim for an area to set up liquidity, so that way when the news comes out, it can just grab and then move where it wants to. So right now we're in between 2210. What else is being tapped here properly? 2240. And then the 50 is also up there as well.
Right around Tokyo or London high. Even though they've already ran through it.
They got they took the Tokyo's candle body high, or fell just before the candle body highs. So they didn't technically liquidate them, but on the 15-minute they did. Yeah, on the 15-minute they liquidated Tokyo's highest with 2 candles. Oh, and there's that one, that seeker we were talking about. They grabbed, they already ran it back under that 1, 2, 3 there. So they already did the drop, so if they hold, then it could go for higher prices up there, or lower prices, because invert it. So if you invert the chart here, earlier we had a 1, 2, 3 set up like this. So there's the 1 and the 2, and then the seeker play that we know of. There's a 1, there's a 2, reaches up, and then completely drops below it. And then the manipulated 1, 2, 3 usually gets back above, retests, and then starts to run. And you can see how it failed price target 1 here, tapped it, turned around. Then here we are back under it again. And then we're trying to close candles above. So if we do hold this, then we could potentially start to run. This is inverted, like we said. So usually those 1, 2, 3s help us spot when the market wants to reverse. And you can see how these prices are all on the same psychological level of 22,040 to 22,050. So when we talk about psychological levels, we speak on the idea of like grocery shopping or retail shopping, right? There's just a price that you wouldn't pay more than because you know somebody's robbing you. So if we look at it, 40 and 50 seems to be that wall where people are willing to just sell it off from. So the discount this entire time has been between 22,000 even. So you can see every time it goes to 22,000, people are more willing to buy it up, but they fluctuate that price more and they only sell off this area a little cleaner. So if we can't make those new lows down there, then everything in the middle is not for us, right? We either want to sell off premiums or buy up the discounted areas, unless we get a setup that tells us we're going to run down to new prices. So right now that setup is the 1, 2, 3 that we have taken place. So market is technically set up to see lower prices. This chart is inverted, like I said. So we just need acceptance to go past the 22,000, and ideally, that means we'd have to give up on the discounts. So in a perfect world, we should get a candle to close and then come back and show us that it can't get back in, and then that would be our setup to take it to lower prices. But with the news in the way, in about 5 minutes, well, 7 minutes, they can just use this opportunity and do it all in one swoop. So just got to be vigilant for it. But at least you can see the 1, 2, 3 idea playing out as we speak. Manipulation experience, stopped out, never actually liquidated the lows here with a candle body. So it only grabbed. And now that it's grabbed, we're back at the psych level. So if we're playing the range, then ideally they should keep it in between these two prices, right? The 50 and the 22,000. So we're basically trading on a product that only moves $50, if you think about it like that. Yeah, so all we need is a reason to get in, but that's all on the 15-minute chart. And honestly, it just looks cleaner on the 15 than it does on smaller time frames. On another note, you can see the direction and then the turnaround point. Tried to go again, another run, and then we're still a part of the turnaround point as we speak. So these positions are truly up for grabs both ways on a 30-minute time frame. This looks like any moment that 22,000 can be bought up and then push us way past prices because of the run, cuff, run, cuff, right? So that's how trends work. So if we kind of zoom this out a little bit, we're kind of a part of something that looks like this. All right, we have that cup area, a lot of wicks that took place before we ever actually got like the full drop out of it. And then the drop was pretty lame. So you can see here, big cuff, 1 and 2, and then this is the area we're supposed to liquidate and drop from. And right now we're experiencing this. So if we can get past 2250, then we're supposed to experience another one of these, right? That would be here. I don't know if you guys can see that comparison. So I'll draw it out again. So this is the level we're talking about for the run. And then right now we're here for the same level going across the board. Then you have the arching manner, same thing. So more advantageous towards the upside when it comes down to the trend. But again, like I said, we got news in 4 minutes. I don't like holding a position into news because it's just very unpredictable. Even if you have a good guess on it, it still is capable of doing whatever it wants. So it's just not worth sitting in something, waiting for something like that. I would say this also looks very similar as well. This one fell off very slowly and then eventually died out. And then we get this quick grab and then blast in the direction. And that kind of looks like this. It's very slow. So the news could be that one thing that goes for the quick jump. So interesting to see it. So we got 3 minutes. Let's take a look at the smaller time frame again. My chart is inverted right now. So I'm gonna put it back to the way it was. Just doesn't look great this way. So like we said, reached back for something and then ended up back into the box that we initially started in. The box that we started in from the opening price is right here at the 930s. This is that box that we had originally drawn out. So it fell out, grabbed the lows, back into the box. If it holds the box, then we blast higher to some higher prices. Where's that 15-second at? Here it is, and then market open was 30. Oh, here's the box. We can probably draw a better box now that we have data. So that would be here. So yeah, we got opportunities. Nice little 1, 2, 3 to get us back into the box. So if we can't hold and see higher prices, then we'll just keep failing this area. And then eventually we'll weaken 22,000 flat, which is here. And then that'll be our dump through it. So 22,000 flat, anything under that we'll try to short the market off of. And then depending on what patterns we get up here, potentially take buys to break for those highs. And news comes out in
1 minute.
Yeah, about a minute, 45 seconds. So I'm not really expecting a big move for this. Like I said, most things are already factored in, but they're going to do what they want. So based off the reaction, we'll be able to see if there's a position for us or not. It's kind of a flat bottom here like the nuke play with the 3 highs. So usually this is where we sell off. If we go below this level, dump. But if we don't, then if this fails, then the other can succeed. Should be the blast. And there goes the news, right? Straight blast off. So that all of this was a correction of the box. Like we said, right? If it can get into the box and hold, then we'll get the breakout for it. But we saw the other examples. The news, if it would have went this way first, we could have got liquidity and then blast off. So unless this is the liquidity grab before the news like we described, then we should be valid for a continuation, right? As in a trending continuation. But pay attention to where these close. This is the opening price right here. This is where the market opened at, the highest price. And we got one candle to close above it, full sweep. If we don't get candles to close there again, they could just liquidate and start trickling back down for other levels. So they just touch midpoint of the box as well. So if we put this on I think we were looking at it on a 15-minute time frame, and we had it inverted, you can see this is the area that we were expecting the drop, turnaround point, and then drop. But if that's not going to happen, then they'll just liquidate this area the same way they did every time, right? Every time they got here, jump, jump. Here we are again. If they can't push it through, then we'll get another jump, keeping that range. So I'm down for shorts if we get back to the 22s right here. Other than that, I'll be focused on the buy side because if we do break this and push, like we said, it'll just be blasting off. So here's our first break. So mental buy order. All right, I would buy this breakout. So if I bought that breakout, in order to stop me out of this trade, they should go back to this level here. Otherwise, they should continue the breakout. Boom. So there's the break. Here's another stop loss that I would have put in there. So that breakout is definitely having some struggles. If we go back to 22.054, I'm down to get in buys and try the breakout for real, considering the way it stopped out a few times. Otherwise, we should go straight down for this stop loss. So I'll put a 1 contract in. Okay, it didn't fill me for that. Nice. Try that again. It could fling all the way back down, so max stop is 22.048. But I ideally would not like to get stopped out there. I think that's like probably $300. So if we can get some candle body lows to create again, that could be pretty good. Yeah, so hard stops at the 47 level. I'm going to delete all this real quick, and then we're going to take our deviations. So we have the cleanest run, I'm going to say, is here. And then the next start of that run is here. It's already doing it. So then the start of this run is here. So price target will be 78. And ideally, we don't want any candles to close back above 56. And if they do get back to 56, they might just rush straight up for the stop loss to get us out of the trade anyway. We have a order block in the way before our stops, so that might give us a bit of protection, but this is a breakout, so if they definitely don't want this to break out, they'll just rip right back into the range here. Other than that, they should just do the good old minesweepy all the way down. So we'll let it rock. If we get opportunities to actually average in, I'm down. If we get stopped out, then I more than likely will just have to wait until we go back to the 22,000s to see if we're actually going for a sell-off or not. I think that was the area we were looking at. Oh, right here. And this right here. Yeah, so only focused on the shorts if we get back to this area. Otherwise, everything up here can be used for buys. Unless we get presented with like a different opportunity. All right, so here we are, we're pushing back in to our original buy order. So like we said, they can do that because the order block is there, but then that needs to send it back to where we need it to go. Otherwise, they'll either A, rush for the stop loss, or B, come back to 61 and then shoot back down for the stops. So here's the stops coming up short. There it is. So closing the order block out, reaching the levels. Technically it should touch and stop us out, but haven't really got it yet. So this order block's supposed to push us in the other direction. So if they want to disregard that, come in, tap this order block, and then come for our stops. Otherwise, they need to rush right back under this trend line here. So if they don't do that, we're not bullish. As in, for the moment, we'll just be ranging. So now we have official stops we can put at 22.050. And then don't really have direction yet, so I'm not willing to average on this play. because we still can grind this area as in a range. Because now the order block's already been swept out, so it could be a clean drop straight back down to stops. So just manage the risk accordingly, and if it doesn't get us to jump off board, then this might inch its way to victory, and then we can see what happens. So order block's been taken out, so that's gone. So all we have left defense-wise is a little imbalance here, but to be honest, those aren't very reliable. So let's just not see price come back. Cool. So mentally, again, this would be a mental averaging right now. So usually I would buy this, but oftentimes the market will fling back up, trying to take those buyers that use trend lines like we have right now. So in order to take the stop loss from people who get in on here, they would want to come back to these levels here. So if we can get price to run really far away from here, then we should be valid. If not, they're coming back for these guys. That'll be that stop loss. So at this point, this has reached the price target that we articulated now. Just tap the psychological level. You can see the candle body's closed perfectly on 22,076. Here's the imbalance that's supposed to protect these dudes. So stop losses here and here. So you have to be okay with this coming all the way back and stopping us out for break even, because that's pretty much the trade. So made it all the way to price target, dipping back now. So if they want to continue it, they need to stop right here and send it right back in. Otherwise, they're coming straight for the stop loss. And then we'll be in this range for a little bit. But not a bad trade. It's pretty good. That was like about $300 and some worth straight to the final PTs. It touched like perfectly on the 78s, but the candles closed right here on the psych levels. Cool. So they stopped out the trend line buyer guy. You see that? They reached back, stopped him out, rocket right back in. Now they have to run. If they're not going to run, that's game. We're not doing it anymore. So stops can come back in the profit here above these candles. If they play with that level, then they're probably going to go past our original position anyway. So we don't even want to be in it. This trend line here is measuring how aggressive corrections are. All right, so notice how this runaway went pretty far. This one only went like 2 candles. This one might not even make it back in. Yeah, so there, just tapped us out. And if they close candles above our mid zone there, then sentiment pretty much changes. So that was really nice price targets on first PT and second PTs. Nice managed risk as well. All right, so now we just need more sentiment in order to understand where price is going. So not too bad. Hopefully I was able to guide you in the entry and the exit of that. And then the stop loss management at least kept the risk to reward fair. That way no one had to fear losing any accounts. So your sizing can be whatever you want. I'm just displaying positions on the screen for us.
Got a snake on there.
Yeah.
So happy New Year.
Yeah, when I was here like 6 months ago, they had it's like a dog. For some reason, picture of someone's dog in the grass. Pretty chill. So candles aren't closing past this point, but we are tapping the levels. I'm down to try shorts here. I don't really like the idea of shorting while we're supposed to be blasting off right now, but could be a move. And then as for targets, I mean, we have a high here, here, and an imbalance all the way up here. So 22,030 would be ideal, but remember we're supposed to be moving up right now, so they can use anything up here to like shoot it back in. So imbalance is here at 22,029. Stop loss wise. Oh, would you look at that? Well, new play. Alright, stop loss, I mean, technically it has to go at break even right now, unfortunately. So they took out all these lows, so they can come all the way back up and tap 22,060 before wanting to go lower. And then if they do that, they can even try to run past those highs to fix the trend that they were supposed to be making, right? Because if this is a trend correction, it would look like this. And trend corrections do what? They go out, they come back in, then they rage all the way back in, right? So we don't want that to happen. So I say at this point, stops just gotta go into the OBs, which they're more than likely gonna grab if they don't rush it right back down right now. And if they do rush it back right now, then we can average into the sell orders. Damn, there's an imbalance right here. Yeah, not great. So we'll have to wait to see if that trend correction actually plays out or not to know if we could even average in. So it's looking like it's gonna blast off and grab our stops right now. You can see the way it came up, cupped. So now this has enough to try to get rid of the order block. If it doesn't, we could potentially get back into the short position under 22,055. Otherwise, we're supposed to blast off and correct that trend that they got going on there. So about a $10 loss on that, just because we missed the opportunity to even take profit off of the impulse, looking for too big of price targets. Cool, so that's gonna turn into a trend correction. I'm gonna put a sell order in at 22,055 to go down. I'd like to take shorts again if we are gonna go down to that level. Otherwise, it shouldn't put us in a sell and we should get in the trend correction. And if we get back in the trend correction, then we'll take the break and retest of it to try to go for higher prices. Otherwise, we should fail getting back into that trend and then come back down. That'll be our short position, and that'll get us the price target we initially wanted, ideally. All right, so it just tapped us in, so hopefully this doesn't just wick us all the way to 69, but technically this is the stops that we would need, because they can get sucked right back up into the trend again. Still holding this mid-level here, so we need it to actually like get away, fall off the wagon. I'd like a better stop loss than 2270. So it should have already dumped at this point here. So this candle can try to rush all the way back up to 6570s area. So I think that'd be like again, $250, $300 stops. But it looks like we're about to get a better stop loss right now. So we just got candle closure there. So I think stops would be best at 59.
There's the dump.
And there's our dump. I would usually average here, but we don't have too much profit right now. But ideally, if they take a low, they'll come right back up and take us out the same way they did the last time, because we technically are in an uptrend. So they just liquidate every downside move we want. So looks like it's coming right for us. Nice. I'm gonna average in this. This is a bit ugly average, not gonna lie, but seems to be rejecting that area. Put both stops there. Targets down to 22029 ideally, but right here is the first target. That's the bottom of the box. Doesn't look like we're getting it. Bottom of the box seems to be the move. All right, stops coming back to 22038, right above these candles here. So either we lock in 600. Damn, how is it not going to take us out of our position, bro? Look at that. There it is. Bangers. Nice $800 move there. Nice average. Nice patience. I think that's $1,000 day as we look at it now. It's $300 on the first play, 8 on the next. This dump could be pretty massive, not gonna lie, because like we talked about earlier, we would also take the sell side at
2220.
2220, we said?
Yeah.
2220.
You said.
Yeah, why did we say that? 15?
Yeah, I think so. Just like
Oh, I see. Yeah. So this, you got your threes there, and then if you look all the way across, this level's been liquidated. 20,000. Yeah. So ideally, that dump doesn't have to start way up here, but if it can't hold the 20,000s, because that's a psychological level, then eventually we have to see lower prices. So think about a declining asset, right? So if there's a home on the market, and I don't know, let's say the home has a lot of things wrong with it, right? The pipes are messed up, lighting doesn't work, could catch fire, whatever the cases may be. All of those are good reasons for the price to go down. So people will not want to pick that house up for fair value. So if we look at this entire range, right? Let's say we're looking at the house's prices. At one point, this house was worth the 20,000, and then at the highest prices, it sold for 22,000. So if the house was good and it sold for 22,000, and then on the market when the house was just made, it was 20,000. Imagine what the house should be worth if it's got problems with it, right? You're probably going to want a cheaper price than it was made for, and definitely cheaper than the highest it ever sold for. So ideally, we can see this asset trying to decline in value, and right now they're fishing out the prices. They're auctioning off these prices. So when we do get a close down here, there's a good chance that people might let go of the value, and they will be able to see that this house may not be worth what it used to be and what it was without renovations, right? So by renovations, same thing with the market. Whatever that news that came out with, the news sent it up and only got as high as it did. So now we would need something else to kick the market back up. Otherwise, we'll just see lower prices. All right, and that's if we get a close under the 22,000. Like you can see all these here, right? But that's consumer psychology, so we still want to have a model going into that. So the model is a new play there. And I think we got one of the best entries, but we're out of it now, so get fucked. But that was a really nice play. We'll let this market operate a little bit, but this is the level that we would want in order to interact with it again. But I doubt we get that if they want lower prices. If they want lower prices, we should just grab flush.